All right, let's dive in today. We're going to be talking about finance and investing, and we're going to be doing it through the lens of Wall Street strategist Tom Lee. We've got some insights from him, pulled from an interview he did on Global Money Talk on YouTube. And let me tell you, this guy has some really interesting and thought-provoking takes.
Yeah, what I find really interesting about Lee is how he connects things that you wouldn't really think go together, like, for example, presidential politics and the rise of cryptocurrencies. It really challenges how we normally view the financial world.
Exactly. He even makes this argument that former President Trump, like his focus on the stock market's performance could create this thing called the White House put, similar to the Fed put, but potentially even more influential, which I thought was really interesting.
Yeah, this White House put idea is really fascinating because it suggests that the administration might actually step in to prevent market downturns, regardless of other economic factors. So it's not really looking at the whole picture, they're just looking at the stock market. But the question is, could this create conflict with the Fed's need to maintain independence and make decisions based on data, not political pressure?
Right, right. Because the Fed's supposed to be looking at the bigger picture, not just the stock market. Like Lee points out that Trump could push for things like tax cuts to boost the market, but those can also lead to inflation, which the Fed then has to fight by raising interest rates.
Exactly. And that kind of tug of war between the White House and the Fed could create a lot of uncertainty for the market. It makes you wonder what those policies would look like in practice and how would the Fed react. Like, for example, if the White House pushes for significant deregulation to stimulate growth, could that lead to instability that the Fed then has to clean up?
Right, that's a really good point. Yeah, it's like a delicate balancing act, and the outcome could have a big impact on, investors and how they make decisions.
Absolutely. And speaking of investors, let's move on to another area where Tom Lee has some really strong opinions, Bitcoin. He's incredibly bullish on it. He's predicting it could reach $500,000 within 5 years.
Yeah, I was surprised by how confident he is in Bitcoin. He even suggests that at $500,000, it would still be worth less than gold, implying it has even more room to grow. But, I mean, that seems pretty optimistic, especially with all the volatility we've seen with, crypto in general over the last few years.
Well, Lee's argument hinges on the idea that Bitcoin is becoming a digital store of value, like a modern-day gold. He sees its limited supply as a hedge against inflation. And he also argues that its underlying technology, which is the blockchain, has never been hacked, making it incredibly secure.
Okay, so I see where he's coming from, but let's say somebody's intrigued by Bitcoin and they want to, maybe dip their toes in a little bit. What's a reasonable approach? Should they go all in or start small? What does he say about that?
Lee actually advises starting with a small percentage, like 2 to 5% of your portfolio, as an alternative asset. That way, even if Bitcoin crashes, which it very well could, the impact on your overall investments is limited. But on the flip side, if it skyrockets like he predicts, it could become a significant holding.
Yeah, that's a really smart approach. It acknowledges the potential upside, but it also protects you from the major downside if that were to happen. So while Lee is a big believer in Bitcoin, what about other cryptocurrencies? Does he see any others with similar potential?
While he does see potential in a few others, like Ethereum and Solana, he mainly focuses on Bitcoin. He acknowledges that investing in those other coins, sometimes called altcoins, can be more of a short-term trade, profiting from their performance during a crypto season bull market rather than a long-term investment strategy.
Okay, so Bitcoin is the main game in town when it comes to crypto for him. But let's shift gears a bit. Let's talk about something that worries a lot of investors, baby boomers and their retirement. As they start withdrawing their savings, will that trigger a massive sell-off in the stock market?
Yeah, that's a very common concern that people have. But Lee offers a slightly counterintuitive take. He points out that baby boomers hold a massive amount of wealth, over $120 trillion. And even their interest income alone is huge. So he suggests that instead of draining the market, they're more likely to continue investing, especially if the market keeps performing well.
Yeah, and he even gives an example. If the market goes up 20%, boomers would gain a whopping $30 trillion. So it's not necessarily a doom and gloom scenario for the market.
Exactly. And on top of that, Lee highlights the huge wealth transfer that's going to happen as baby boomers pass their assets on to millennials, who are even more likely to invest in stocks.
So this wealth transfer could actually be a boost to the market over the next couple of decades?
That's what Lee believes. Instead of a drain on the market, he sees it as potential fuel for further growth. It really flips the script on how we typically view the impact of demographics on the stock market.
Yeah, it's really interesting. How Lee challenges like conventional thinking on so many fronts. But let's circle back to that White House put concept that we talked about earlier for a moment. You mentioned that Trump might push for specific policies to boost the market, which, potentially puts him at odds with the Fed. Can you elaborate on what those policies might be and like how they could actually create that conflict?
Sure. So one example that Lee points to is tax cuts. While they can stimulate the economy in the short term, they often lead to larger budget deficits and potentially inflation. And that's when the Fed might feel compelled to raise interest rates to kind of like cool things down, which could then dampen market growth, which puts it at odds with the White House's desire for a booming market.
Right, right. So it's this constant push and pull between short-term market gains and long-term stability of the economy, right? Like Lee also suggests that Trump's focus on the stock market might even impact how he views, like, Bitcoin. He argues that if the U.S. adopted Bitcoin as a reserve asset, it would be a huge signal of its security and legitimacy on a global scale. What are your thoughts on that?
Yeah, that's where things get really interesting, I think. Reserve assets are typically things like gold or U.S. Treasury securities that are held by central banks to support their currencies and manage exchange rates. So adding Bitcoin to that mix would be a huge shift, a real signal of mainstream acceptance for cryptocurrencies.
But is that realistic? Would the U.S. government actually consider something that radical?
It's definitely a speculative idea, and there are lots of hurdles to overcome. But I think the fact that it's even being discussed shows how far cryptocurrencies have come. Remember just a few years ago, most people dismissed Bitcoin as like a fad or a joke. But now central banks are exploring digital currencies, and some even see Bitcoin as a potential store of value. So
Right. It's a reminder that the financial world is constantly evolving and we need to be open to new possibilities. But speaking of evolution, let's shift gears to a sector that's facing some serious challenges: commercial real estate. With more people working remotely, office vacancies are soaring, and some are predicting a major downturn. Does Tom Lee share that pessimism? What does he have to say about that?
So he acknowledges the challenges for sure, but he takes a more optimistic long-term view. He points out that commercial real estate is a long-cycle asset, meaning that it tends to recover over time, even after like significant downturns.
So he's saying that while things might look bleak right now, we shouldn't assume it's the end of the story. Does he provide any historical parallels to support that view?
Yeah, he actually compares it to the housing market crash of 2008. Back then, many people thought the housing market would never recover, but, it did. And those who were patient and invested strategically during that downturn ended up reaping significant rewards.
So he's saying that times of uncertainty can also create opportunity, but it requires a long-term perspective and a willingness to look beyond the immediate headlines.
Exactly. And it's not just about blind optimism. It's about identifying assets with intrinsic value that might be temporarily undervalued due to, market sentiment or short-term challenges.
Right. Okay, now bringing this back to Tom Lee's Granny Shots ETF, which aims to find those undervalued opportunities, can you give us a little more insight into the specific themes he's targeting with this ETF? What makes them so special?
So he's identified 7 key themes that he believes will drive stock market returns over the next decade. And these aren't just random trends. He sees them as major forces shaping the global economy. These themes include things like digitalization, automation, genomics, climate change and the energy transition, aging demographics, and rising global wealth.
Okay, that's quite a diverse mix, but can you give us some concrete examples of what those grand shot stocks might look like within those themes? What are the specific qualities that he's looking for?
Okay, so let's take digitalization as an example. It's not just about investing in any tech company. Lee is looking for companies that are leveraging technology in innovative ways to disrupt traditional industries. Think about companies that are using artificial intelligence to personalize healthcare or revolutionizing logistics with drones.
So it's not just about being in the right sector. It's about finding those companies that are truly pushing the boundaries and creating real value within those themes.
Exactly. And this applies to all of the themes. So in automation, he's not just looking at robot manufacturers, but he's looking at companies that are using automation to increase efficiency and productivity in creative ways. Think about companies that are automating complex tasks in construction or developing robots that can assist with surgery.
It's like finding those hidden gems, the companies that are kind of quietly transforming their industries from within.
Precisely. And this focus on innovation and disruption is what makes the Granny Shots approach so interesting. It's not about chasing the latest fads or hype. It's about identifying those companies that are quietly building the future.
Okay, I'm starting to see what he means by granny shots. It's about those under-the-radar opportunities that might not be flashy, but have the potential to deliver those outsized returns over the long term.
Right. It's like that underhanded free throw in basketball. It might not look as impressive as a slam dunk, but it's often more effective and reliable.
I love that analogy. It perfectly captures the essence of what Lee is trying to do with this ETF. But let's break down a couple more of those themes. Genomics sounds particularly fascinating.
Yeah, so genomics is all about understanding genes and their functions. And advancements in this field are leading to breakthroughs in healthcare, agriculture, and beyond. Lee believes that companies involved in gene editing, personalized medicine, and other genomics-related areas have incredible growth potential.
So we're talking about things like developing new therapies for diseases that were once considered incurable, or creating crops that are more resistant to pests and climate change.
Exactly. It's a field with the potential to transform our world in really profound ways. But it's not just about the science. It's also about the companies that are translating those scientific breakthroughs into real-world solutions.
And that's where that granny shots approach comes in. It's about finding those companies that are not only on the cutting edge of science, but also have the business acumen and the strategy to bring those innovations to market.
Absolutely. And that's what makes this ETF so compelling. It's not just about investing in trends. It's about investing in the companies that are shaping those trends.
Okay, two more themes to go. Let's talk about climate change and the energy transition. These are obviously interconnected themes that are top of mind for many investors these days. What's Lee's perspective on this?
He sees this transition to a more sustainable future as one of the biggest investment opportunities of our time. As the world moves away from fossil fuels and embraces cleaner energy sources, there's a huge need for new technologies and infrastructure.
So it's not just about investing in solar panels and wind turbines. It's about finding those companies that are developing innovative solutions for energy storage, grid management, and even carbon capture.
Exactly. And it's not just about, doing good for the planet. It's about recognizing that the transition to a more sustainable future is also a massive economic opportunity.
So it's about aligning your investments with the values of a more sustainable future while also positioning yourself for potential financial returns.
Precisely. And this theme aligns perfectly with the Granny Shots philosophy of finding those undervalued opportunities that have the potential to deliver long-term growth.
All right, last but not least, let's talk about aging demographics and rising global wealth. How do these themes fit into the Granny Shots framework?
As populations age, there's a growing demand for healthcare, senior living facilities, and other products and services tailored to older adults. And Lee sees this as a significant opportunity for companies that are catering to the needs of this growing demographic.
So it's about recognizing that demographics are destiny. And as the world's population ages, there will be new opportunities for companies that can meet the unique needs of older adults.
Exactly. And this ties into the theme of rising global wealth. As economies around the world develop and more people enter middle class, there's more disposable income and more potential for investment. And Lee believes that companies that can tap into this growing pool of wealth, particularly in emerging markets, are well positioned for growth.
It's fascinating to see how these themes are all interconnected. It's not just about individual companies. It's about understanding the larger forces that are shaping the global economy and identifying those companies that are best positioned to capitalize on those trends.
And that's what makes the Granny Shots approach so compelling. It's not just about picking stocks. It's about understanding the big picture and finding those companies that are quietly building the future.
This has been an incredibly insightful deep dive into Tom Lee's world. It's amazing how he weaves together seemingly disparate trends and ideas to create a cohesive narrative about the future of finance. But before we wrap things up, I want to touch on one more aspect of his investment philosophy: alternative assets.
Oh, that's a great segue. Yeah, we've talked about Bitcoin, but he believes that a well-rounded portfolio should also include other assets that don't move in lockstep with the stock market. These alternative assets can help reduce overall risk and potentially enhance returns.
So it's like having a safety net for your portfolio, just in case the stock market takes a tumble. So what are some of the specific alternative assets that Lee recommends?
Well, we'll delve into those in the final hour of our deep dive. Stay tuned.
Okay, so we're back, and we're finally going to uncover what Tom Lee considers those must-have alternative assets for a diversified portfolio. What's beyond stocks and bonds? Where do the adventurous investors play?
Well, Lee emphasizes that a truly balanced portfolio shouldn't just rely on the stock market's performance. He suggests incorporating assets that tend to move differently, almost like a counterbalance, creating a buffer against big swings and potentially boost overall returns.
Right, it's like spreading your bets, not putting all your eggs in one basket. So where does he recommend looking beyond Wall Street's usual suspects?
Well, one area he highlights is actually quite familiar: real estate. And while we talked about the struggles of commercial real estate, He sees residential real estate as a potential winner, especially in certain markets.
Ah, real estate. It's a classic for a reason, right? People always need a place to live. And as populations grow and cities expand, that demand just keeps rising.
Exactly. That's the core idea. Of course, real estate investing comes with its own set of considerations. Property management, market fluctuations, and those ever-changing interest rates. But it does offer diversification and the potential for appreciation over time.
So it's not a hands-off investment, but it can be a solid part of a long-term strategy. But what about something a bit more, well, exciting? Does Lee venture into those less conventional areas too?
He definitely does. For those who are comfortable with higher risk and illiquidity, he suggests exploring things like private equity and venture capital.
Okay, private equity and venture capital. So that's what you're backing startups and companies that aren't publicly traded, right? It seems like you need a lot of expertise to navigate those waters.
You're absolutely right. It's not for the faint of heart. It requires a lot of research, due diligence, and an understanding of those specific markets. But for those who can access these opportunities and make informed decisions, the potential returns can be significant.
So it's like playing in a higher stakes game with potentially higher rewards, but also, of course, higher risks. Okay, so we've got real estate, private equity, venture capital. Anything else that kind of breaks the traditional mold?
This might surprise you, but he even suggests looking at collectibles. Think about things like baseball cards, vintage comic books, fine art, rare stamps, antique furniture, things people are passionate about.
Wait, collectibles? Like turning your hobby into an investment? That's pretty unconventional.
It is, and he acknowledges that these aren't for everyone. They could be illiquid, their value is subjective, and it takes a lot of knowledge to spot a truly valuable piece. But for those who are deeply knowledgeable and passionate about a specific area, collectibles can be a way to potentially generate returns, while also enjoying the assets themselves.
So it's like combining passion and profit, but as you said, it takes real expertise to do it right. You can't just buy any old baseball card and expect it to become a gold mine.
Exactly. It's about understanding the history, the rarity, the condition, and the overall market for that specific collectible. It's a niche area, but for those who know what they're doing, it could be an intriguing addition to a diversified portfolio.
Wow, we've covered a lot of ground today with Tom Lee's ideas. From the potential impact of a White House put and Bitcoin's future to the rise of granny shot stocks and even the allure of collectibles. He's given us a lot to think about.
Yeah, it's been fascinating to delve into his unique perspective on the financial world. He reminds us that it's constantly evolving, full of unexpected connections and unconventional opportunities.
What I appreciate most is how he encourages us to challenge conventional wisdom and really think critically about where value might lie. He's not afraid to go against the grain, whether it's championing Bitcoin or suggesting that granny shot investments might be the key to long-term success.
And that's a really powerful lesson for all of us, I think. It's not about blindly following the crowd or chasing the latest fads. It's about doing your own research, understanding the fundamentals, and being open to those less obvious paths to financial success.
Absolutely. We've just scratched the surface here, but hopefully this deep dive has sparked some new ideas and given you a fresh perspective on how to approach investing and navigating this ever-changing world of finance.
And who knows, maybe there's a granny shot opportunity waiting for you out there. It could be a company you've never heard of, a real estate market that's poised for growth, or even a hidden gem in your own attic.
The key is to stay curious, stay informed, and never underestimate the power of thinking differently. Until next time, keep exploring, keep learning, and keep an eye out for those unconventional opportunities that might just change your financial future.
1811, 8, first 1879, 5679, and they're kind of like really on the field of a day afterwards. Those are guys who felt like there's much time in culture.
So no, that's not good.